Welcome back to part 2 of the investment series on Financial Fridays. Today I have a very special guest. He's the country manager of CIBCFirst Caribbean, Dominica. He's the president of the Dominica Association of Industry and Commerce, and he's a fellow Rotarian. And of course, he's an investor. Help me welcome Stephen Lander. Thank you, Stephen, for joining us today on Financial Fridays. This has been a long anticipated series. Everybody wants to know about investing and investment. So I brought you here today to share your insights and opinions on all things investment related.
All right. Thank you. Thanks for having me.
It's a pleasure. It's a pleasure. As a recap, we spoke about investing. And what is investing? It's allocating your money with the expectation of receiving a benefit in the future. And Stephen is here today to tell us all about that.
Yes.
So let's get ready. This long anticipated series is sponsored by a brand new business in the market called The Cave Barbershop. Look out for its grand opening. It's coming soon. So Stephen, is investing for everyone?
I won't necessarily say it's for everyone, but I think everyone can do it. I like to think of investing as a tool. We might articulate some goals for ourselves, financial goals in this particular case, and investing is just one tool that can help us to achieve those goals.
I agree. But you know, sometimes in our culture, we're a little bit risk averse.
Right.
We don't understand what investing is and we shy away from it. So I wanted to know, why should one invest? Why should one consider trading?
Okay, so as I said, it really starts with what goals that we have for ourselves. And investment, as you say, is one way to allocate capital that we may have at our disposal and get some benefit out of that, be that medium or long term. And so if I can use myself as an example, I'm thinking about my kids' future, I'm thinking about my future retirement. And so I'm looking to set wealth aside so that when I get to retirement, for example, I'm very comfortable and I have some financial resources that I can draw on to give me a certain level of a quality of life, if you will. I'm thinking about my kids and setting them up for their future so that when they become adults, they have some resources that they can tap into and pursue their dreams, right? So investing is really about taking what we have now and making more out of it, you know, by using the tools that are in the market that help us do so.
You hear that, guys? That's the reason why he entered investing. He's looking for his family's future. He's building generational wealth. So you've mentioned that you invest, you often trade.
Right.
If someone is new to this, how can they learn? How did you learn?
Yeah. So I was fortunate to have the academic training, so I did a degree in finance, and I've had a lot of experience with investing through my career as a banker. But I would say that with the availability of information today, it's very easy for someone to just, even through the internet, on YouTube, there are so many educational videos, and even some of the individual trading platforms that we can use to access the market. I use TD Ameritrade. You mentioned interactive brokers. Even on there are trainings and you know, seminars and so on that you can partake in that teaches you all about investing. But I think a very simple way to do it now is to join a support group. Even now with what I know, I am part of a support group, and we talk about different strategies, we talk about new opportunities that are showing up in the market, we share our opinions on certain trades, right? If I have an idea, I'm thinking about taking a position, I might put it to the group and ask everyone what they think. And I think that's very valuable. We kind of have to lean on each other to share our ideas and discuss what strategies that we're putting forward in our portfolio.
And you make a valid point, because in trading, it comes down to the team that supports you.
Right.
So guys, be mindful of the teams that you join. Ensure they're open to educating you as well as allowing you to succeed. In Dominica, in the region, you'll find some of us are a bit risk averse. We've never heard about investing. We don't know where to start. We don't know where it ends. What advice would you give to someone who is new to investing, who's never invested in their life?
Well, I would say first start slow. But I mean, Warren Buffett must be a familiar name to you, and he gives a great piece of advice. He said, invest in what you understand, right? And that is much more easy to do than most of us think. So if we just think about our own habits as consumers, for example, what are the products that we're buying? Why are we buying them? What are the things that we're passionate about? And those are the things that are actually driving value in those companies.
Right.
So why not invest in the company that you know, right? And the one that you appreciate. And as a consumer, you actually support financially. And there are others like you who are doing that, right? And that is something that you understand. And you can start there, and as you expand your knowledge, you branch off into other things.
It's important that you mention expanding your knowledge. What strategy would you give someone who has very limited funds if they were to invest?
So if you have very limited funds, that used to be a very big issue some years ago. It's not so much of a big issue now. One of the ways that you can enter into the market, for example, is through an exchange-traded fund, or what they call an ETF, where you can buy shares of an ETF just like you would buy shares of an individual stock, but the ETF is really a portfolio of stocks. And so you get the benefit of a diversified portfolio of stocks and all of the benefits that come with that, but buying one share of this fund. And it's much cheaper to do that because in that fund, for example, you may have an Amazon that trades for above $3,000.
Right.
You may have a Tesla that trades for between around the $500–600 range now, but you might buy that ETF share for $100. Right? So you get an exposure to these large companies without actually having to buy the individual shares of those companies. And again, you get the benefit of diversification. So if one company is doing bad and another one is doing well, the performance of the portfolio is balanced and you don't get, you don't face the loss fully. The other thing that I would mention is that right now things have evolved to suit what they call the retail or the small investor. So if you don't have a lot of money, you can actually buy fractional shares.
Yes.
So you're not buying a whole share, but a percentage of one share. So coming back to the example of Amazon, you may be able to invest $300 in something that is worth $3,000, but you only own 1/10 of it.
Yes.
Right? So that is another strategy that someone can use.
And in addition to that, you get the benefit when it gains value.
Exactly.
But you also lose.
Well,
but your risk is managed.
Yeah.
Because you're not owning it wholly and entirely.
Yeah, well, yeah. You're exposed to the extent that you own.
That you own.
Right?
Yes. You hear that, guys? You can buy a percentage of a share. If I'm looking to invest locally, I don't want to trade on the US stock exchange.
Right.
What can I do locally or regionally to invest my money?
All right, so in terms of market securities, there are a couple of things to take note of. So let's talk stocks and bonds. Obviously, you can invest in a local company, buy shares of that local company. Those shares may not be publicly traded. They may be privately held. So you would have to buy those shares either in a private issue or from an existing shareholder in that company. My personal experience is that these transactions are usually very
tight-lipped.
Yeah, they're held close, right? So you may have to be lucky to come across that sort of opportunity. You have companies like Dominica that is local, but has publicly traded shares on the Eastern Caribbean Securities Exchange. So that might be one option. You would have to go through a broker. We don't have a full-fledged broker in Dominica right now, but I think the National Bank of Dominica offers that service through the Bank of St. Lucia that has a full-fledged brokerage. You also have the treasury bill and bond market that is not public as well. So through the Dominica Treasury, you can actually invest in treasury bills. And likewise, you can find government securities not only from Dominica, but from all of the governments in the Eastern Caribbean on the regional bond market. It's still the ECSE, but what they call the Regional Government Securities Market, RGSM. So that's an option, but I don't want us to ignore the other investment asset classes as well. So let's talk real estate. Right? That's something that you can also introduce into your portfolio relatively easily on the local market, but it takes a bit more capital to do so. So it's about finding the right option. I encourage people to find properties that are producing income. So we have the old adage, buy land. Yes, buying land is good, but how do you turn that land into a productive asset where it's actually paying you money?
It's generating income.
As opposed to taking money away from you.
Right.
So those are the kinds of things that we have to consider. But there are lots of opportunities once you put your mind to it and you start to explore.
You hear that, guys? We have investment options in Dominica. So if I buy a share in Google, BlackBerry, Amazon on the US Stock Exchange, is it possible for me to transfer those shares to my dependents?
It's possible. It's not unlike doing a money transfer. I guess that's the most practical example I can use. Obviously, that dependent would have to have a brokerage account. And think of your brokerage account as the registry that, itemizes all the owners of shares. And so you're instructing your broker to change the owner from one person to another. And, that process may vary from broker to broker in terms of what is required. But it should be a fairly simple process to actually get that transfer done.
So it can be done?
It can be done, yeah.
Yeah, it can be done. Let's buy some shares, guys. Okay, generational wealth. We're constantly being told that we can build generational wealth, whether through investing or trading. We know that you can do that through investing. But do you believe that you can build generational wealth through trading?
It's probably a very soft yes. Trading presents opportunities. Let's call them big bang opportunities, if you want to call it that, right? You're trading volatility, you're looking for large swings in prices, and you're looking to really take some huge short-term gains. But when you talk about generational wealth, by its very nature, you're looking at a very long horizon. Yeah. And so one of the key objectives I would imagine in that sort of scenario would be preservation of capital, right? And that doesn't really jive well with trading because whereas there is a lot of upside potential, there is also a lot of downside risk in that sort of activity. So yes, if you trade and you're always on a positive outcome, if I can call it that, your results are largely positive, then maybe you're building wealth over time. But I think there is too much risk where you can simply lose all of what you've gained over the same time horizon. So I don't think trading is necessarily the best strategy if you're talking about generational wealth. That is more an investing line, right? Taking a more long-term view of your position and building your portfolio along the way.
Yeah, so in that case now, what is your opinion on day trading versus long-term investing?
I mean, I don't do day trading myself. I think day trading as an activity is very risky. It calls for very intimate knowledge of what is going on. It calls for, a certain level of expertise, if I can put it that way. Although, what we found in the market now is that the market is a lot more technical now. With the onset of algorithms and machine learning and so on, it's really about more technical analysis than fundamental analysis that's driving trading activity. And there's a self-fulfilling aspect to that, which means if everybody is thinking if a stock goes up by 20%, for 4 days straight, I'm just making up something in my mind, right? Then it must dip by 10%. Inevitably, that stock will dip by 10% because everybody is playing along the same idea. So that's a self-fulfilling aspect. But over the long term, if that stock is a good value, it'll probably continue to go up even if it dipped temporarily by 10%. So that's why I said in terms of generational wealth, I think you have to take a longer view. There will be interim volatility, but you have to take the longer view and figure out where is that stock going over the long term, right? And that's what's going to help in that aspect.
We're getting gems, guys. We're getting gems for free. So I've heard about shares, futures, options, crypto, Forex.
Right.
What are they and what are your opinions on trading them?
Okay, interesting question. Let's start with shares. Probably the most obvious one. It represents an ownership stake in an entity. Options, futures, and forwards are derivatives. And we say derivatives because these instruments in and of themselves have no value. Their value is based on the value of an underlying asset. So an option, its value is driven by how a share price moves. Likewise, a forward contract, its value is derived from how the value of the underlying commodity moves. So interestingly, these instruments were not created to be traded themselves. They were created as risk management tools or hedging tools, as we call them. And by hedging, we mean you use something to limit your exposure to risk. But the markets are the markets, and the markets are innovative, and the markets realize that the value of a hedge position can increase or decrease depending on how the asset price is moving. So, for example, if I buy an option, which is a choice, not an obligation, to purchase a Microsoft share of stock for $100 in December 2021, and in November of 2021, Microsoft shares are trading on the market at $200, somebody might pay me a handsome price for my option to buy at 100, because obviously they're going to make money instantly. And so that is how people trade options and are able to make money off trading options and not actually exercising options. So the option is a tool. You can use it if you're uncertain about future movements in price and you want to use it as a hedge, as something to limit your exposure to the movements in future prices. You can use it in that way, or you can use it in a speculative way, right? Where you're anticipating a certain movement and you feel like a certain option position will generate value. So you're going to buy that option position now so that you can sell it in the future. So they're all good tools, but I encourage people to research, learn, understand what you're doing before you actually start trading things like options and futures and forwards, because they're great tools. They have, there's a potential to make money trading them, but I mean, if you don't understand what you're doing, you can get caught on the wrong side of the fence, and you don't want that. And
that's the same case for the Forex and the cryptos.
Yeah, so Forex, likewise, I tell people Forex is particularly interesting because it's one of the few things where you have to understand, in buying one side of a Forex transaction, you're taking the opposite view on the other side of the transaction, which means if I'm buying pounds, if I'm selling US to buy pounds, I'm taking a negative view of the US dollar and at the same time taking a positive view of the British pound, right? Which means I am assessing at the same time what is going on in those two economies. So it's a little bit harder than if you're just buying, let's say, a share of stock in Microsoft. You're kind of looking more or less at the US economy to figure out what's going on, and probably technology as a sector to figure out what's going on, and saying, okay, I have a negative view of that, so I'm going to sell. You don't have to compare it to something else. And so I tell people Forex is a little bit more complex, right? So you have to just ensure that you educate yourself, you practice, which is a good thing. So on my trading platform, I have a whole section called paper money.
A demo account.
Yeah, it's like a demo account where you can practice trading, but not actually risk real money.
Yeah.
Right? So practice, right? Do your analysis, come up with a position, take the position in the demo environment, see how it works out, try that over time, and see if your strategy works before you risk your own money.
Does that sound familiar? Check part 1. It is said that cryptocurrency is the money of the future, like Bitcoin.
Yeah.
What is your opinion on that?
I have a broader view. I think money in a materialized form is going away. So money will be digital. And if you think about crypto, that's a large part of its identity. The other part is that it's deregulated. That's the part that I have questions about, right? I don't necessarily think that this deregulated medium of exchange is the future medium of exchange. What I think you're going to see more of is the traditional regulated currencies, or fiat currencies as they're called, taking digital form and probably piggybacking off the same blockchain technology that is now driving cryptos like Bitcoin, right? You will see adoption of that technology, but I don't know that Bitcoin is necessarily the currency of the future, as you put it.
Is that the same case with the new digital currency that we've launched in the ECCU?
So you're already seeing it. So we have the DXCD, Digital Eastern Caribbean Dollar, that has been launched. The first transaction was performed in Grenada not too long ago, and it's based off the same technology. And I think that's more of what you will see. You will see a more frictionless environment in terms of how we can transact, because exchanges can happen electronically. Borders and distance won't be an issue. So we are moving into that sort of space, but I don't think the currency and the primary medium of exchange becomes totally deregulated, as you would see with a Bitcoin.
Wow. So guys, DXCD is here. Soon enough, we'll be exchanging money digitally. So educate yourself on what's happening in the ECCU.
Yeah.
We reside in a Black community. We know the challenges when it comes to building generational wealth. What are some of the financial myths you think that should be debunked in our Black communities? Because we've been told, for example, you need to work hard to succeed in life.
Yeah.
What are some other myths that can be debunked?
So I think it was Robert Kiyosaki who wrote the book Rich Dad Poor Dad that really, it really did a number on that myth, right? That what we're traditionally taught is to go to school, get an education, get a job, go to work, and that's how you succeed in life. And he really encouraged people to move away from that model and to focus on investing and acquiring assets and productive assets at that, and so on. I think one of the challenges for us as a community, and particularly coming up in the Caribbean, which I think probably creates an added disadvantage because you don't have the instant access to markets and so on, first world markets, to invest you need money, right? You have to have something to put to work. Now, with the way the market has gone, where we're talking about the retail investors, we're talking about platforms like Interactive Brokers, Robinhood, and TD Ameritrade that allow you to trade for free, right? It used to be if you call your broker up, for every time you call him up to do a trade, he charged a commission. These sites are allowing you to trade commission free. They're allowing you to open accounts with much smaller balances. They're allowing you to trade in much smaller blocks. I could go onto my platform and buy one share of one company, and that would be totally fine. I don't have to buy 100. I don't need a minimum balance in my account. So I think the barriers to entry have been lowered significantly. So let's start there. Everybody can have an opportunity to access it. And everybody has the opportunity to find something to put in. So sometimes you say, boy, by the time month end comes around, I don't have any money. But then somehow we find a little extra 100 to have a drink.
Find it.
Or to eat out, or to do something, to go socialize with friends, whatever it is, right? To buy that shoe that we were looking at last month. We find the money. So one of the good things that can come out of your effort is when we teach ourselves how to budget and we start to make notes and keep track of how we are spending, then we can identify the pockets that we can pull the money from and, redirect those funds to invest in activities that are going to help us out in the future. And we have to not be selfish about it. I don't think I'm going to become a multimillionaire investing, but maybe my son will. And so someone has to start that generational wealth path. Let it be you.
You heard it, guys. And you didn't hear it from me this time. You heard it from the investor. Thank you, Stephen, for joining us on the investment series. It was really a pleasure sharing all these gems with you and giving us an entire different perspective on what investment is and what it can do for us and our families. And I believe that we can't build wealth through savings only. Do you agree?
I agree, totally.
You hear that, guys? Save to invest. And before you begin investing, ensure that you have an emergency fund and possibly life insurance. Remember, only invest money you can afford to lose. And don't forget to subscribe to the YouTube channel and click the bell so you won't miss a thing. Also check us out on Facebook, Instagram, and Twitter. See you next time.